Wednesday, October 21st, 2020, Maneco 64, home of alternative economics and contrarian views. Usually we look a lot at the dollar index, and yes, the dollar index is turning back south, but more importantly, the US dollar is making a 28-month low versus the Chinese Yuan, and this is putting pressure on Treasury prices. I know the 10-year yield is still relatively low, still below 1%, but we are spiking above 0.8%, which I've said in the past is a key level. So what that means, in my opinion, is that the Chinese could be starting to unwind more of their Treasury holdings. The Chinese, of course, hold over $1 trillion of treasuries. As of August 2020, of course, they held 1,068 billion, or just over a trillion, according to US Treasury data. There was a story I remember from the Global Times, which is supposed to be state media in China, back in September. Zero Hedge covered it, and it says China to gradually sell 20% of its US Treasury holdings, may dump it all in case of military conflict, state media. So what do I think is happening? Well, I think it's got to do, unfortunately, again, with politics, with the election, presidential election in the US. I think a victory by President Trump would accelerate the selling of treasuries. President Trump would be a lot more hawkish towards the Chinese, and he is. And the expectation is that a potential President Biden would be less hawkish. Some people actually say he is in the pocket of the Chinese, and I wouldn't be surprised about that either. So I think personally that's what's going on. I think the Chinese are hedging their bets, so to speak, and I think that's why the dollar's going down versus the yuan. And of course, the treasury market, the bond market, is very important for all financial assets. We saw back in March, April, how treasury yields actually dumped when the stock market was under pressure, but it also spiked over 1%. So there is a lot of volatility, and that's what's bad for the market. Right now, the markets are still holding on fairly well, but I think volatility in treasuries could be a danger for all financial assets. And that's mainly because US treasuries are seen as the risk-free rate of return. They're supposed to be safe havens. And if you get the safe haven asset trading all over the place, that is a problem. And what about the stimulus package? That's also a problem for the markets in terms of even treasuries, because I think the Federal Reserve is waiting for that stimulus so they can start buying more treasuries, because they own already, I think, 22% or so of all treasuries. They need Uncle Sam to borrow more. And I think it's going to be a problem getting this stimulus package approved. I've noticed that the White House has increased its package, so to speak, to just under 2 trillion. I think 1.88 trillion. The Democrats are looking for just over 2 trillion. So 2 trillion would be kind of in the middle. But I don't think the Republican-controlled Senate would approve such a big package around 2 trillion. So I think we're still far away from getting this stimulus package through. And with the political situation getting worse, I think, for Biden, we could continue to see the dollar drop versus the yuan, and also versus the major currencies as per the dollar index. Right now, for example, we're back below 93 in the dollar index at 92.80. So with that, let's have a look at the Chinese yuan chart, and then we can look at the markets and we can look at the 10-year yield chart as well. So here's the Chinese yuan chart. It's a weekly chart. As you can see, the dollar is pretty much in free fall here versus the yuan. What could that mean? Yeah, it could mean official selling of treasuries. And then they receive the proceeds in cash, and then they sell that for yuan, and that's why the dollar could be dropping. Or it could be Chinese private investors getting out of US dollar assets. But I would say it's probably more related to the official sector. We will have to wait, of course, in the next few months to see how the Treasury holdings are affected. In terms of technicals, I would say that 650 could be the next support, where we'll find some support for the dollar versus the Chinese yuan. As you can see, there's a pretty good double top there at 720. The midpoint was 685. So extrapolating the distance from 685 to 720, I get 650. But and we could see some kind of rebound if things don't go down in a straight line. So now let's look at the 10-year yield chart. As you can see here, there was a spike back in August or end of August up to just below 0.8%. And that's why it was an important level now, because it was a key resistance. And as you can see here, we try to break through that level back in the beginning of this month, and now we're breaking out towards 0.82. And as you can see here in March, when the stock market was under pressure, yields went down almost to 0.3, all the way down to 0.3, but they also spiked all the way back up to almost 1.4. So that was the volatility that we're seeing. That is a sign of stress for all financial markets. As you can see here, though, we're very far away from being in such an environment, but I think it warrants for me to warn you about it, because we're breaking key levels. So after this 0.8 level, I would say the area around 1% will be very important. As you can see, there's a spike to almost 1% back in the beginning of June. So I think we need to keep a close eye on US Treasuries, on the dollar, and it could be, how can I say, a signal that all is not well in the financial markets. So with that, let's look at where the markets are this morning. It's 8:13 a.m. London time. We've got spot gold at $19.19, up just over $12. The high has been $19.21. So yes, this $19.20 level is very important. There are people out there who are trying to protect that key level, of course. That was the high from 2011, the all-time high in gold prior to this year. Silver has been doing well this morning. We've traded back up above 25 to 25.16. We're at 25.04 right now, up 42 cents or 1.7%. The stock market right now, the Dow is up 60 points at 28,355. The S&P is up 7 at 3450, or up 0.25%. But I can tell you, we've been a lot higher. We've been up as much as 150 in the Dow, so it's now coming back down. In terms of the currency, we've got the pound up 0.5% at 130.13. The euro is up 1/3 at 118.57. So yes, we're starting to see the dollar also keel over versus the dollar index. It's not just the yuan. Dollar's down another 1/3% versus the yen at 105.13. And versus the yuan, we're down almost 0.5% at 663.47. WTI crude is at 41.31. That's down overnight about 1%. But if you remember yesterday when I made my video, crude oil was around 41. So we're actually up in the last 24 hours. And back to the 10-year yield, even though we're up just about 3 basis points, the the most important thing to know is that we've broken through the 0.8 level. We're at 0.825. The high has been just below 0.84. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. Make sure you hit that little notification bell to be notified of all my new videos. And you can also follow me on Twitter, Facebook, and all these other platforms below here. I wish you all a great day. Take care. Bye.